Alrighty, what's up guys? This is Taylor, and I am doing your free video for Thursday, March 9th. So as always, I hope y'all are doing well, and the title of tonight's video is Your Stock Pick Doesn't Matter. Now, I'm not saying that to come across as a jerk, of course. I'm saying that more as a reflection of the market we're currently in. So a good example of your stock pick and my stock pick not mattering, check this out. So this morning, now, it's my indicator, so I'm a little bit biased. But this morning in my mastery, we picked up some put credit spreads here on AMAT. Now, at the time of entry, this thing was it's picture perfect. We had big 3 buy signals on the weekly chart, the daily chart, the 4-hour, the 1-hour, the 30-minute, the 15, the 5, the 3-minute, and the 1-minute. You had a whole lot of alignment here for a push higher. Right, structure came together, momentum came together, and it was doing it from head to toe. As far as my style of trading, doesn't get any better than that. That's really it's as good as it gets. Green beans from head to toe. But here's how AMAT finished today. After cruising to a high of day where it was up about 2%, finishes today down just about 1.5%. Yeah, we still got our weekly buy signal. We still got our daily buy signal, but that 1-hour, the 30-minute, the 15-minute on the heat map here, they all print the sell signal. So, good structure, good momentum from head to toe. You're doing that in a daily squeeze, right? Everything lining up here, and it still got caught up in the crossfire here today. So what I mean by your stock pick doesn't matter, and my stock pick doesn't matter, you don't have the alignment right now in the market that's supportive of being long. Like the structure of the S&Ps and then a few of the pieces of the puzzle, your dollar, your junk bonds, they're not aligned here for, let's go buy calls and sell puts. It's a little bit of the opposite. Now, did I know we were going to get spanked to the tune of 2% today? Well, the potential for a flush was there. I didn't think we were going to flush that much. However, the problems at hand, they've been popping their head up here for a couple of weeks. So, a couple things here. We'll blow the chart up. Now, problem number 1. And now, guys, as we go through these problems, take note of them. If these things begin to change, right, if these problem spots begin to improve, well, then maybe the dynamic changes. Then maybe buying the dip and selling puts might make a little bit of sense. But problem number 1 on our weekly chart is that we came into the week with my indicator printing a buy signal, and with today's flush, the chart goes from bullish to neutral. So a loss of momentum and a loss of structure as we fade back under the weekly 50 and the weekly 21. So where there's been some warning signs is coming into today's session, the only time frame the bulls quote-unquote owned, and mind you, this is all from my point of view, but the only time frame the bulls owned was the weekly chart. Right, that's all they had. And they lost it here today. So then they take it down a notch to your daily chart, and it all gets pretty troublesome. So of course last week you had the very short-lived break of the 200, at which point everyone and their mama got short, and then as tends to be the case, the short squeeze ensued Thursday, Friday, and a little bit into Monday. So for a couple of days there, right, at the hands of a short squeeze, they're making a little bit of progress. They're getting back above a few of our key moving averages. Our lower time frames are going bullish. They made a couple steps forward. And then today, they give it all back. So we got some problems here, my friends. Big 3 indicator prints a sell signal. We're under the 21, we're under the 50, and now we're under the 200. So I know a lot of you guys enjoy Sam's videos that he does on Friday. It was a couple of weeks back where he talked about like the concept of trend support versus structure support. So trend support would be your moving averages. Today the S&P loses all that trend support. So then comes your structure support. Structure support is something like a big recent bottom. Where do I see structure support? Down here at 3,800. So the bears have got a full grasp on that daily chart, and then a quick peek here at the heat map, and it ain't looking pretty. Sell signals on the 1-hour, the 30-minute, the 15-minute, and the 1-minute. Alright, next problem. The Dirty Dixie. Dollar hanging out with buy signals above the 105 level. And what I actually think is a potentially bigger problem here is actually over here on the weekly chart. So one of the, call it one of the best things the bulls had going potentially in their favor as of late, were these weekly sell signals here on the Dixie. So as soon as that weekly sell signal prints, what you should look for is a flush lower. At some point we're going to rally back to the moving average. And as long as we continue to print that sell signal, things at that point are aligned for your next leg lower. So what the bulls have done here is canceled out for now the higher probability that the dollar is going to roll over and take out support down here at 100. The indicator goes from bearish to neutral. MACD goes positive. And they're poking their head back above that 105 level, right back above your weekly 21 EMA. So if one of the best things the bulls had going was that potential weekly downtrend unfolding here in the Dixie, this move to an extent kind of cleans things up a little bit. And then, like I mentioned, you're doing that while you're sitting pretty back above 105. So that's been an issue, and that hasn't changed. And then HYG has been a problem here for a few weeks. So in these bearish environments, or these, whatever you want to call it, these volatile environments, we're going to get these big short squeezes. Right? They're spastic. They can be fun if you're on the right side. It's hell on earth if you're on the wrong side. The major thing you always want to keep in mind, when that short squeeze unfolds, do they make any progress? Do they keep any progress? HYG, I think, is a great proxy here. Back here on December 28th, bottoms out, and then a big rally ensues. Well, the S&Ps about a week later bottomed out, and a pretty big rally unfolded. Then the old girl tops out here on February 2nd, and sure enough, the S&Ps top out on February 2nd as well. So if the junk bonds here are any indication of where mama market wants to head, this all leans pretty bearish for now. So going back to what I was saying earlier, our stock picks don't matter right now. We're not in a market where you got full alignment across the board. Where your stock picks matter is if you take that setup that I had today in AMAT, daily squeeze, daily buy signal, buy signals from a weekly chart down to a 1 minute, you take that setup in a market where the S&Ps look pretty much the same, it's money. Usually going to work in your favor. But right now, the overall market not supportive of, hey, go get long and hit the beach. You don't have any wind at your back. You got a lot of headwind. If we just lean into the pretty colors, all the pretty colors on the S&P suggest lower. All the pretty colors on HYG suggest lower. And the Dixie is pumping out them green beans. So as far as my book of trades, I did pick up a little bit of AMAT here today, and that was kind of in an effort to balance out my book. Came into the week with a call credit spread on the S&Ps up here at 4,100, and of course, in hindsight, might have avoided getting long AMAT and just held on to the call credit spread. But food for thought there, guys. Tesla, Google, Apple, I don't think any of that matters right now. If the S&Ps, the dollar, and the junk bonds can't clean up some of the problems we've talked about here tonight. So my advice to you, if anything, is if you're going to be pursuing longs in this market, do that with a hedge in place. All right, market rallies a bit, sell some deep out the money call credit spreads, and then you've got a little bit of you got some breathing room, right? You have a little bit of an allowance, so to say, to continue to try to trade that market higher. But as far as I can see it, guys, if they don't clean things up here, and if they don't do that quickly, we're probably in for a flush down towards 3,800. So my level here for tomorrow for the bulls would be the daily 200. I think their best chance of survival, at least for now, is getting it back above that daily 200. And then from there, they got to continue to rebuild. So as always, guys, thank you for watching. Hope you found it helpful, and I'll talk to you in the next one.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.